Hi, and welcome everyone to the In Frame series. I'm delighted to be joined by the CEO founder of Level Financial Technology, Stephen Holliday. Welcome, Stephen. Before we get into this, just really wanted you to tell us a little bit about you and your career, probably before Level, basically. So, how did you get here?
Sure. Well, good afternoon, Mel. Thanks for having me on this broadcast. So my background is distinctly non-staffing based. So my background is in financial markets. So I started my career in 2000 and I worked at Deutsche Bank for 7 years as a stockbroker in London. And then I joined a firm called GLG Partners, which is now part of the listed hedge fund group, Man Group. And I worked there for 10 years as a fund manager. Both were great places to work, a lot of fun, met a lot of great people, and they're very much sort of their time. And I think where it kind of segues into what I do at Level is that throughout my career in the city, my specialism was looking at the banking sector, really share prices of big European and US banks. So if I went on Mastermind, my specialist subject would be the financial crisis, which I kind of had a front row seat for. Sometimes I felt I was part of the cast. And the European sovereign debt crisis, and they were fantastic times to learn about how banking worked. And really at the back end of my career, I got more and more interested in financial technology, because what you were seeing in the banking sector, banks really are a sector that have never been disrupted. If you go back 15 years, if you want to do any form of banking, from make a payment, foreign exchange, get a mortgage, make a deposit, you had to go in one of 5 banks, and to be one of those 5 banks you needed 30 billion in capital and 250 years of history, which is a hell of a barrier to entry. And what you were seeing through both technology, changes in regulation, is that some of those services were being liberated, being made available to smaller financial technology companies. They could build on top and build value added niche services around. And really that kind of, I guess I call it the unbundling of Lloyds Bank, really interested me, and I could see a lot of the applications for it. And when I read about on-demand pay in America, it was kind of light bulb moment for me, and that sort of led to me moving to found Level.
Wow. And when did you found Level?
2020.
2020, right. And for those people who've been under a rock and don't know who Level are, tell us a little bit about Level Financial Technology.
Yeah, so Level is an on-demand pay provider. So we have pioneered and created technology that enables workers to access their accrued earnings between pay periods. The benefit of which it puts the worker in control of the money that they have earned, instead of having to wait for fixed pay cycles. And for the company, it's proven that if you can close the gap between work and pay, this is motivational for productivity purposes. It will help you recruit workers, it'll help you retain them, and it will help you fill shifts. And increasingly, it's seen as part of a financial well-being agenda. It's the right thing to do, increase flexibility around pay, because ultimately they have earned this money. 85% of the UK population is paid monthly in arrears, and for a significant minority of them, that is a challenge. So that is the core of what we built at Level. And if I go back to 2020 when we founded it, we didn't understand the legal structure of this. We didn't understand whether everyone would want it. And what's happened over those 3.5 years is this service, particularly in the last 12 months, has got mainstream. You now see major supermarkets, large swathes of the NHS all move to adopt it. And I think in certain subsectors, you pass the tipping point, and this will become a utility service that all employers offer. Our view is that the end game is that on-demand pay with a monthly backstop is how everyone will be paid in the Western world.
Got it. And I guess it's just something that we've not seen before or heard. I'd never heard of it until, like you, I stumbled across it when I was working in North America. But often it's aimed at potentially unskilled workers. It's not necessarily seen, workers that perhaps don't earn as much as some of the skilled workers that our outsource members tend to employ. again, when you say it's going mainstream, is that something, because I guess it's deemed to look at people who earn a lot less that need this. But are you seeing that shift?
Well, I think you're right to identify, as a starting point, who are the first adopters of this? What is our ideal customer profile?
Yes.
And it's a blue collar shift worker who's ideally engaged through an app, because they're the ones where, demographically, finance might be a bit tighter, and
Hmm.
also the employers get the value prop, particularly in the kind of post-COVID cost of living crisis world, of the challenge of finding labour. For a better paid white collar worker, cash flow may be less of a challenge. However, having said that, particularly in the outsource world, I think there is quite a strong value prop, really around financing and pay cycles. So, I know we've talked about this in the past, Mel, but I was actually speaking just the other day to an employment services organisation, and they employ people on £500 a day, and they pay them weekly on behalf of the employer.
Right.
And they do that because that's how they've always done it. But
Yes.
from a business perspective, that means you're running 52 payrolls a year, with all the associated costs of running 52 payrolls a year. And then you've got the cash flow challenge, which in the current interest rate environment is much more acute. If you're having to pay people +7 and maybe that invoice isn't coming in till +60, that's always been a challenge, but it's much more of a challenge when interest rates are 5.5
Yes.
than when there were 0.
Yeah.
So our argument in that market is that you could go to those workers or that agency and say, look, you want to move out payment terms for your white collar workers, but you don't want to upset them. You could go in there and say, look, you can offer them on-demand pay, which means if they want it weekly or whenever they want, they can ask for it.
Yeah.
But you can move the backs up to monthly, and what you will find is the majority of them perfectly happy with monthly pay. And that can actually solve a lot of challenges, not least the cost saving from running 12 payrolls a year instead of 52.
Yeah.
And then that cash flow saving, because you're having to push less money out the door on a weekly basis.
Got it. So 3.5 years in, you're now seeing, obviously, as you've highlighted, certainly in the last 12 months, more adoption and that understanding that actually this can really help us to attract people, retain them. Morally, it's it stops them going from to people perhaps who I don't even know what they're called, payday lenders, aren't they? Something like that. So it can prevent that. So morally, it's a good thing to do. What are your next what's your plans for Level now? What's the sort of next phase?
Yeah, well, I think your characterization of the market is correct, that it's gone from being a kind of innovative product where you really, it's like, who are you? What is this? Whereas now we speak to HR and operational leaders, and people increasingly are aware of it. They're aware that competitors use it. It's increasingly going mainstream. We are shortly due to publish a code of conduct for the industry. We're one of the founding members of that. This was prompted by the FCA, and I think that adds further legitimacy and normalization of the industry. And you begin to see a lot of payroll firms move into it to offer it as a bundled product. So I think you're in this stage where it's going from innovative to mainstream, and in some sectors that's already happened. And really, what we want to do next at Level is be part of that. And being part of that for us is, we believe, a lot comes down to how you distribute the product. So at the moment, it is distributed through the Level app. You sign up to it. We will fund the credit line. We'll sign up your employees into our T's and C's. But I think increasingly, as on-demand pay becomes normal, employers will want to bring it into their own employee experience stack, be it an app they have for their employees or however they interact with them. So in the same way, most employees in the country don't know what payroll firm pay them. They probably don't care what on-demand pay firm pay them. So we have developed our technology in such a way that you could embed it into pre-existing tech stacks, and you can call it APSCo Instant Pay. You can have it, under your brand, under your terms. And we've developed a very quick solution to embed it into that, both for direct clients and for partners. So if you're in the employee services business, you're interested in on-demand pay, you've had the buy versus build debate, we can just say, look, we can provide it to you. We can be the tech provider. So it's really what's the best way to distribute our product to get it out to as many people as possible.
Fantastic. Okay. And you know the APSCo OutSource members. You've met quite a few of them already. And you know the nature of what they do. How do you believe Level can give them competitive advantage in a highly competitive space?
Yeah. I'm quite fascinated by staffing as a sector. Right? It's a very big sector. And when I think about the core value prop that we sell at Level, fill shifts, recruit, retain, that's at the very heart of what staffing companies do. If you ask Toyota what they do, they sell cars. If you ask staffing companies what they do, they recruit, retain, fill shifts with people.
Yeah.
So, but having said that, it is not one of the sectors that has been the early adopter of on-demand pay. That's been quick service restaurants, supermarkets, care. And I think some of the reasons for that are partly because when you have weekly pay, there may be deemed to be less of a necessity for it. And partly because of the cash flow challenges in staffing that you've got credit lines in place already. So I think the value prop is very strong in staffing. And I actually think, coming back to the previous comments, that on-demand pay can be used to make pay cycles more efficient, make credit funding more efficient. So I think there's a big opportunity there for the sector to embrace it, because ultimately all the permanent employees at the companies where you're placing staff increasingly have on-demand pay.
Yeah.
You are the guys who don't. So I think there's a big opportunity set within that space to really, solve challenges which are core to the space. How do we fill more shifts? How do we hire more people? How are we more competitive? What can we do for contractor well-being that can help us when we're filling our next DD questionnaire, etc.
Yeah, understood. And something you and I have explored as well is also some of the outsourced providers. Obviously, they don't fill the requirements themselves anymore directly. They use a multiple number of suppliers, what we would call third-party suppliers, to fill those vacancies. There's also that whole dynamic there of how suppliers are paid. And something you and I mentioned before is potentially you can use Level to offer, when you've pushed supplier margins down potentially to create cost savings for the end customer, you can use Level to pay them earlier, therefore increasing supplier motivation, loyalty, etc. Is that something also you're exploring, or is that something that perhaps is not the focus for Level?
Yeah, no, you're correct, man. In that, the principle of on-demand pay is really saying that we're taking a database. So for a worker, that is their workforce management time and attendance system, which currently exists on the employer side, and we're showing it to them in our app and saying, this is what we've got you down as doing. Do you want it now? And our technology can pull the pay for them down now. But because the work's been done, it's not a loan, it's an early payment of the service received. And that same principle and that same technology could be applied for an MSP supply chain. So you've got Mel Forbes agency and some big MSP here, and you can see you've sent the workers to the end client. It's all sat in a BMS system. We confirm that we owe you £10,000. You're not going to get it to the end of September. If you want it now, click here. You can have it subject to a fee. And again, from my sort of financial background, what kind of fascinates me, I spoke to a big VMS player about a year ago, and they're like, we have 800 million going over our platform. And I'm like, okay, how much money do you make? And it's like, well, we make about 4 or 5%. And from a payments perspective, I'm like, well, you've got 800 million going off your platform. What if you charged a percent fee when all the money moves around? What if you actually could charge for this? Because the credit risk is very muted given who all the counterparties are. So I think there are other applications for the technology. Again, I think are very particular to supply chains in staffing, where you have these payment gaps, but you were really you have a very good credit at the end of it, the end client. And if you can unlock those, I think you can create real win-win situations, which negate the need for expensive external financing, be it for the user in the form of overdrafts and high-cost short-term credit, or for agencies and supply chains with invoice discounting.
Got it. Yeah, makes perfect sense. Okay. If you could have a superpower, what do you think it would be, Stephen?
For me personally, or for Level, or for
For
both?
you, for you personally, you can do both. I want to know what it would be for you.
So for me, well, maybe it sounds a bit boring. I like one of the superpowers when you just kind of pause time. Everyone else
Right.
stops. I mean,
Yeah.
I'm not sure like Marvel are going to build a franchise around Pause Man, but you know, they made a Barbie movie, so who knows? But
Yeah.
just stop, clear off my to-do list, sort out my fantasy league team for next season, and just take a bit of stock and think about things, because things move very fast.
They do indeed. And do you know what? That's so true. People say, well, isn't that a holiday? But I should imagine with folks like you, that's not a holiday, because you'll get interrupted on holiday. So there is no pause button that
Well,
exists today for you.
I have 2 young children who have probably caused me probably need a hit pause as well. Yeah.
Absolutely. Well, thank you for, this is a soundbite giving us some insight into you personally, but Level, and what you do. I'm, as you know, I've been fascinated ever since you and I first met. I've been absolutely fascinated with how I think, as you say, this could just become so mainstream. It's just what people do, and the advantages of doing so are huge. So thank you for sharing. Really good to see you. And yeah, see you again soon.
Great. Thanks for your time, Mel.